Hello, everyone, and welcome to today's webinar. So today we are going to be talking about the art of family decision making, governance structures for family businesses. We are joined by Anissa Boulaya, who is the CEO of the Dawiya Family Office, and Levin, who works for Ocarian. So just some instructions during the webinar. If you have any question, we have the Q&A section at the bottom of your screen where you can send all your questions and we will answer during the session. Thank you. Over to you, Anissa.
Thank you, Harry, for the introduction. Thank you, everyone, for joining us for today's webinar. Our focus is not just on wealth preservation, but on something much deeper, of family decisions making. And why we're introducing you to this topic today, it's because in family businesses, wealth rarely disappears because of poor decisions or poor investments. It usually does not make it to the second generation due to unclear authority and due to unmanaged conflict within the family and due to lack of governance, actually. So that's the reason why today we wanted to explore how governance and how structures that protect that governance can protect not only the wealth of the family business, but it can also protect the relationships in the family. It can ensure leadership continuity, and it can long-term unity of the family. So today we're going to be covering the reality facing family businesses in Africa, what family governance actually means, how to implement the effective decision-making frameworks, and what are the roles of the solutions such as wills, trusts, and foundations. So myself, I'm Anissa Boulaya. I run Dawiya Family Office. We're based in Dubai and in Lagos, Nigeria. And by the way, today we are joined by our regional director, Ibukun, who's on the call on the webinar if ever you have Nigeria-specific questions. Dawiya Family Office, we cater to successful African families and African family businesses that are very well established back home and that are looking to expand internationally, consolidate their assets, and prepare their legacy, prepare the transmission of these assets to the second generation. And we're not only focusing on business engineering and legacy, we're really focusing on our very long-term vision, let's say, is really to build a community of successful family businesses that would work together to build the continent. And to cover today's topic, I'm joined by an expert that does not need to be introduced anymore, Levine Bell from Ocarian. Levine is the commercial director Middle East of Ocarian in the UAE. He has more than 20 years experience in finance and advises high net worth individuals and businesses on corporate structuring, fiduciary services, and wealth management, particularly within the DIFC. His expertise includes UAE foundations for asset protection and succession planning, structuring real estate holdings in the UAE, and advising family offices on wealth management and succession trends in the region and globally as well.
Good morning, everyone. Thank you.
Thank you. So without further ado, we're going to start the topic. And I'm going to start by showcasing what's the reality of wealth today for African families. So today, many African families hold assets across multiple jurisdictions, but their businesses operate regionally or globally, and their children study abroad, and their assets or even the real estate assets are held across multiple jurisdictions. That structure that increases the complexity for these family businesses. And I would like for Levine now to tell us what are the complexities these families are being exposed to due to the structure, to the family structure.
Thank you, Anissa. Good morning, everyone. The main issue that we have is essentially those families do not succeed on to go in the second generation because the way they are structured. So we talk about, Anissa, you did mention in terms of the international aspect of the business, of the assets, and what they're doing also. But international asset means also international exposure to different laws. So these are the issues that you see why family business fail in the second generation. So that includes access to financing, high cost and efficiency, exposures, liabilities, no asset protection, no privacy, probate, related problems, and no tax planning.
Yes.
And
Thank.
yeah, yeah.
Go ahead, Levine. Go ahead. Sorry.
No, I will let you lead on the access part, what you see from Dubai perspective for African families. Yeah.
Yes, absolutely. So the first thing we look after when these African families come to us in the UAE or in Lagos or everywhere in Africa where we are set up, we look at helping them consolidate their assets. That's the first point we do, because we realize that the biggest pain point in Africa, even when we start talking about legacy and asset protection, the biggest pain point is financing, banks and access to financing. So what we do as Dawiya Family Office, we do help them access financing by consolidating their assets and organizing their assets under, let's say, a holding or a distribution and treasury center, whereby we enable them to have relationship with strong local banks that will help them access liquidity in the medium and long term through either business loans or through financial instruments such as trade finance, etc. And that structure actually also enables them to do two more things: access private debt and private funding from private families, and also to streamline their costs and reduce their costs. But I know much more benefit than this to structuring the wealth better. So I will leave it for you, Levine, to detail these aspects.
Thank you. Thank you. So you could easily do a asset consolidation through a holding vehicle, and this will facilitate access to financing. This will manage and consolidate in terms of liquidity, in terms of operation in one structure. Where the issue lies is the assets are held in personal name. And when you own asset in personal name, you're exposed as an individual. So a businessman could be sued for bankruptcy. He could be sued for any form of liability as a director. So if that person is compromised, the asset is compromised. Then, so essentially, the asset is the shares of that holding vehicle. And this is why we talk about asset protection. Those shares are not protected. When you have a second layer to it, your name appears directly as shareholder of that vehicle. So there's no privacy there. There's no privacy from a point of view of for people that target you. That could be also government, that could be anyone knows that you are worth this much. Then you have a issue of probate. Anissa, you did mention multiple countries. So the probate is the process by which you, upon your demise, your asset move to your heirs. What happens if you have asset in multiple countries? What happens if you have multiple residency, multiple passport, which is quite common, and sometimes multiple families? Which law will prevail? And that's what we talk about probate-related problems. Should be the country laws in Nigeria, for example, that prevail over your US asset? Or should it be the US law or UK law of your passport? All this happens because the asset on your personal name. And this leads also directly into what you call tax planning. How many people you know count the number of days that they spend in countries? Because the income and the asset is associated to them personally or directly. So eventually they have no diversification and no legacy.
Thank you, Levine. I think you mentioned a number, only 6%. Can you remind me what's the statistic regarding second generation taking over the family businesses?
The second generation, it should about 40%, but at the third generation, it's worse. You're less than 10%. And according to latest survey, only 6% of Nigerian families have got dispute resolution system in place.
Okay.
So, and the fact is, when I talk about dispute resolution system, it's something that should be sustainable and doesn't depend on one individual or one patriarch or one matriarch.
Thank you so much, Levine. I think when the African businesses and families come to us to discuss the potential solutions, we have three types of solutions we discuss with them. Basically, we discuss with them wills, we discuss with them family trust, and we discuss with them family foundations. And I will focus a little bit on the will, because the will is the easiest and fastest solution, and it's a solution we make mandatory for our clients as soon as they approach us and they ask us to help them set themselves up internationally. The first topic we discuss with them is the will. Can you tell me, Levine, why you think the will is a good first step solution, let's say, for these families that are contemplating international setup for their families and for their businesses?
Sure, thanks. So just for people listening, a will is a document that states your wishes upon your death, how the assets are allocated. And it's not clearly said, it's a basic document that you should have for a businessman, because there are two things only certain in life: death and taxes. So death will happen, so you have a basic part. So the will concern allocate the assets upon your wishes, so what you decided during your lifetime. Why it's interesting for a will is anything that wasn't captured by any of the structure will be captured by the will. So think of it like a safety net. But the best part is the will start that thinking process of me not being here, and so get the family into that mood of thinking, what happened if? And that thinking process is important because it takes time to think about legacy. It takes a lot of effort, it is a lot of consensus among family members to think, what do we want? What are our values? And where do we go? And rapidly, during this thinking process of a will, you realize what are the limitations of a will. So a will only applies.
Yeah. So the will is a first good step to have, and all the more if we have children underage in the UAE for guardianship and custody aspects. However, that step is absolutely sufficient, and when the families and the family businesses they run start thinking long term, we quickly talk to them about trusts and about foundations, and that's where Levine, your expertise is absolutely unmatched in the region. So I'd like you to if you can first tell me what are the benefits of trusts and foundations that go beyond what the will represents and what the will covers.
Sure. So the will only applies toward upon death. So that means that in case of incapacitation, in case of bankruptcy, in case of anything that happened to an individual, the will doesn't provide that asset protection part. That's the first aspect. The second aspect is a will is only applicable in states, in countries that give you that testamentary freedom.
Sorry to interrupt, Levine. Can you go to the next slide so our audience can see the benefits at the same time? Thank you.
Right. Yes, sorry. So we talk about this. So the trust and foundation is essentially you're moving the asset from your personal name into a structure. And we will talk about trust and foundation, but just we'll refer to them as structure right now. That transfer make it an asset protection because then you are not part of it. You also avoid probate because probate, the will is still a probate system. It still have to be enforced. With a trust and foundation, there's no such thing as probate. The assets are already in the structure and the structure distributed. You have a clear, effective succession planning. With a will, you can have some conditions, who receive what and when, but you cannot have a family constitution or some form of governance inside of it. This has to be enforced by an active body that could be a trustee in a trust or a council through a foundation. And that's succession planning. We talk about asset, but we talk also about who takes a position in the business. What are the qualifications of the different members of your board? And how do we choose for family members? When we talk about family business, we tend to forget that there is an element of family in it. It's a business, yes, but those families need to find a way to coexist and tolerate each other, and find a way of handling dispute. And a will doesn't provide you this. You need a structure that continues. So also, the will is in one document. You can modify, quite flexible, as long as you have capacity and you are alive. But once it's done, it's done. The only way you can modify the will, or not modify, is to challenge it. And this is where the lawyers will come in, different family members, and it becomes a mess. Through a foundation and trust, you can have system in place to auto-correct it. Basically, we can go back to the court, we can apply, you can put a number of system within the documentation of foundation to provide what happened in certain scenarios. So, and like I mentioned, you can decide through the legacy structuring who takes control of this business, what are the qualification to take the real estate business, what are the criteria to make payment for schooling fees, what are the criteria to finance entrepreneurship within the family. And you can also have a part of what are the conditions upon which the family can undertake philanthropic giving. What are the conditions for this payout? And what are the values of a family? And essentially, you have total privacy. A will is private until it's distributed, and then that's it. Whereby, with a foundation and trust, the asset move during your lifetime. So there's no public details of founder, beneficiary, or council members. And of course, I did mention it, it improves the family governance. So, Anissa, you have any question on this?
Yes, actually, the term that comes back very regularly is eternity, let's say. Like the will is a static document and it manages a situation at a given moment, while by a trust will allow you or allow the document you want to have of your wealth and the preservation you want to have of your wealth to survive you and to survive even any potential conflict, any changes in the family, right? So, but the term that comes back often and often is governance. So my understanding is, okay, trust and foundation are legal structures and they need to be there and for you to be able to achieve that objective of eternity of your wealth. However, the structure in itself does not resolve the issue. What I hear you talking about again and again is family constitution and family governance. So I would like you to tell us what it is. What is family constitution? What is and how the key person in a business or the founder in a business or whoever is today managing that family business and that family wealth need to think about it early enough, let's say, in the process of building the future of that wealth.
Thanks, Anissa. So think of family governance as your system that you have currently of decision making, of who controls what, who owns, who makes the decision. And to be fair to a number of businessmen, the system is here. The family governance sits somewhere in the brain of a patriarch or matriarch. It's in a document somewhere, and it works well. In family businesses, you have this concept called fake harmony. So during the lifetime of a patriarch or matriarch, everybody says yes. Everybody loves each other and work together.
And it's even more true in our African families, right? We can't stand against the patriarch or the matriarch by respect, but because of our tradition, etc. So we have to be okay with everything they say, as long as they are. But we have to pretend that as brothers and sisters and cousins and neighbors, we get along, right?
Yeah. And once that patriarch or matriarch sadly passes away or is unable to do that, your family governance goes with that person, because the families do not have a system to deal with conflicts, do not know how, and do not know what are the values. So you might have very intelligent people, but they don't know what are the values, what us as a family work together towards. So this is the issue.
Yeah. So Levine, you insist a lot on the passing over and the passing of assets, but I just want to give an anecdote because 2 weeks ago I was in Zimbabwe and I attended business summit of Zimbabwe, and in the room there were a lot of families. There were a lot of 2-3 generations sitting around the same table. And what I heard, and I heard a lot, is we are suffering right now. We're not even waiting for the patriarch or the matriarch or the founder to pass away. We're suffering right now in how do we manage that business. These generations are not, let's say, getting along, although they're getting along, but they're not managing to find the right system to talk to each other and to decide with each other and to implement with each other. So my understanding is that trust or a foundation, if you think about it the way, with the right people, can help you resolve this overwhelm during the life and after the life of the founder.
Correct. Ideally, you want to be able to set up a structure before any issues, because once the issue arises, effectively the demise or incapacitation of a patriarch or matriarch, it's very difficult to get everybody on board. So early on, and there is also the issue, what we call of capacity, whenever you do trust or foundation. So I need the patriarch and matriarch to be fully able and aware and capable to sign and discuss and put their values into the structure. Just one point, very critical for those families. There is no such thing as a perfect structure. There is this little step by step to build that governance around it. And the idea is always to be nimble, because families change, business change, the regime change, whatever system you have, you need to be able to adapt. And having something that's closed and fixed and rigid doesn't work also for family businesses. So this is where we need to talk to the family, reach that family constitution, and make sure how we can implement it afterwards.
Absolutely. And you will tell what's the benefits of a foundation and how does it compare? Sorry. You will show us a basic structure.
Correct. Yes.
Foundation. So, even if I hear you well, right? Every structure is unique to every family. Every structure is movable and adaptable and needs to evolve with time and with the family situation. However, just having like a view on what a basic foundation structure can look like.
So we talk about foundation because this is the easiest part to explain how structuring works. So essentially, a foundation is a corporate vehicle set up by founder upon signing the chart and bylaws, nominating the council. So that's your board of directors. These are family members, and typically the founder will be sitting on the council also. You have a system of control or supervision called the guardian, and then you have the family members as beneficiaries. So this is the upper part of a foundation. So a corporate vehicle without shareholder, but someone can set up for his families. And the chart and bylaw is what you mentioned, Anissa. The constitution will be part of that documentation. So essentially, that you work with family will be embedded in your bylaws. So now you have a vehicle that needs to abide by this constitution, not some document that has been drafted and left in a drawer. Now it's part of a corporate vehicle. Once this is done, then you transfer the asset. Here, the founder and any contributor can contribute asset to the foundation. And because this happens during the lifetime of the founder, upon the demise of the founder, there's a change in the structure itself, and there's no probate because the founder doesn't own the asset.
Yes, thank you so much, Divine. In the interest of time, I'll go directly to my question. When I was in Nigeria on a roadshow, a lot of families were telling me, yes, we have our trust, family trust. And I wonder, like, I always hear you talk about foundation, not about trust. I want to ask you, what's the difference between a foundation and a trust? And why do you insist so much on foundation? And why a foundation is not just a charitable vehicle, as some people may hear it?
Oh, I will start with the last question that you asked. Most foundations are private family foundations. The charitable one that you heard are those that goes public to raise funds. That's why in the popular mindset, mind frame, it's always linked to charity, because in the news, the media, you see charitable foundation going out looking for funding. but the majority of foundation are private foundation. So let's take back to the first question. What's the difference between a trust and a foundation? They both do the same thing. They are tools of wealth structuring, where you move the asset from the individual to a structure, but they come from different jurisdictions. Trusts emanate from UK, from England, common law. So wherever the British Empire went, you have common law, you will have trusts. South Africa, Nigeria, India. Foundation is what you call a civil law European structure. So based on civil law, it's a registered entity. It's like a company. Wherever the European went, you have civil law, you will have foundation. So UAE, the whole of GCC, and a number of civil law ex-European colonies in Africa have civil law entity. So why does it matter? It does, they both do the same thing in different ways. Just if your asset is in a common law jurisdiction and you operate in a common law jurisdiction, it might make sense to have a trust. If you operate in a civil law jurisdiction and your assets in a civil law jurisdiction, you will tend to use a foundation. But there is a right distinction here. With time, a number of common law jurisdictions started adopting foundation. So we end up in a situation where we have common law foundation now. So like in UAE, in DFC, that's what the DFC foundation is a common law foundation. So it gives you the best of both worlds. It gives you the certainty of civil law. It can operate in the UAE, but it defaults to rules of trust that people understand and like. So that distinction is not really material nowadays. In certain jurisdictions like the US, I just need to mention that it's very easy to set up a trust, very cheap, and it's very popular also for that reason. So to your question, which one to choose, it will depend on where the assets are, what's your plan, and what's the plan for the family. So these will determine what type of structure you want to choose.
And a lot of African families and businesses are choosing either the UAE or Mauritius as their headquarter, let's say, for their legacy planning. And for both those jurisdictions, you would advise to go for more of a foundations with a more of a corporate style governance rather than a trust whereby the governance is kind of out of your hands and into a trustee?
Right. So trust, when trust was established, so the tradition is I'm giving away my asset to a third party, which is the trustee. And the whole debate is how much control should I retain? And typically, businessmen, high net worth individuals that build their wealth by themselves hate to give that type of control. And unfortunately, if they don't give that control, you put the trust in jeopardy. The trust is in danger because you keep too much control. That's what the concept of sham comes in. You don't have this issue with foundation. The foundation has been constructed or built this way. You sit as council member and you manage it. That's why a number of businessmen, a number of individuals are comfortable setting up foundation and trust.
Thank you so much, Levine. Before I go to the key takeaways of our presentation, I just would like to announce to all our attendees that they can post their questions. We have an hour of Q&A coming up. So please, if you have any questions, write them in the Q&A section and Harry will be reading them to us and we will be designing the designating the best person to answer your questions. So go ahead and post your questions. And Harry, if there are any questions on the live on LinkedIn as well, please send them our way. So the key takeaways of our presentation, Levine, is wealth without governance is very vulnerable, and we need to think about it as soon as possible. Decision-making frameworks will prevent emotional conflict, and even though we love each other in many, many different occasions and situations, when we have hard decisions to take, we may start hating each other within the same family. Legal structures such as foundations will formalize your governance. So even if you have it in your head, you have it on a piece of paper, you have it on a board resolution, putting it into a foundation will formalize it. Trust and foundations do provide long-term continuity and asset ring fencing, and we prefer foundations because they offer both the best of both worlds, the certainty of civil law as well as the flexibility that common law can offer to adapt your structure with time. And then proactive planning protects both your wealth, but most importantly, it will protect the well-being of your family and the surviving of your wealth from one generation to the other. On that, I will mute myself until Harry tells us what's the first question.
Hello. We have two questions for Levine. The first one is what differs from REIT/PFA with foundation in governance sense?
So a REIT is a real estate investment trust. It's essentially fund. So that's a fund instrument. So a fund is basically pooling of capital all together, investment. So in your current scenario as a family, it's either your trust, your foundation that will invest into a REIT. So a REIT itself is just a vehicle. It's like your business, it's just a vehicle that undertakes investment. So in terms of governance, they both have governance either on the board level or on the trustee level. But when we talk about family governance, we talk about the family sitting on the council or the family having some form of say on the trustee. That's what we're talking about in governance.
All right, thank you. The second one would be a question from Daniel.
Ask Lawal Abubakar if that answers his question or if he wants to ask a follow-up question as well. But we can go to the second question now.
Right. Yeah. So for many SMEs in emerging markets like Nigeria, the line between family, wallets, and business capital is often blurred. At what stage of growth should a family business move from informal oversight to a formal family council or governance board to protect the business longevity?
Can I take that one, Levine?
This, yeah.
Yeah. So that's a very good question, actually. And when we, as an individual or as a family, when we start a business or we take over a business, we're most of the time so overwhelmed by what it takes to build that business and grow that business that we forget about governance and about formalizing that governance. And generally, we start realizing what it is when it's already too late. I just want to give an example. Yesterday, I was working on a gold concession in Niger, and there are there are 8 shareholders in 3 different buckets. And when I asked to formalize the decision making through a board resolution, and when I asked to define who's going to own what, how much, and how it will be owned, and how the decision will be taken, everybody yelled at me. Everybody was like, oh, you're delaying the project, you're not helping us go ahead with the project, and so on and so forth. And I told them, no, I'm just structuring it for the future. I'm structuring it sure that business will not face any issues down the future. And I realized that they don't foresee those risks, or they don't want to foresee risks today. They want to leave them for when these risks will arise and then manage them, which is, for me, is not the right way we should be thinking about things. So I think when we are in a family business, very, very, very early stage, we should think about how we are going to be taking the decisions, who will be taking them, and we should formalize that as soon as feasible and as soon as possible. And I would say, if I had to take a timeline, I would say within 1 year of that business being a running business, we should already sit and formalize it, because otherwise we would be firefighting all along. And I want to say to everybody, there is an alternative solution to firefighting. When we are an entrepreneur, we think that being an entrepreneur is firefighting. No, being an entrepreneur is being a visionary, and there is an alternative to firefighting, which is called governance and proper governance. That's my answer.
Thank you.
Thank you, Anissa. Daniel, if that's you're satisfied with the answer, please let us know. So for now, we don't have more questions. If there are, I'll let you know.
I
Yes,
see a lot of
yes.
them. Will a
Yeah.
trust be preferred over a foundation if all assets are domiciled in one country? Questioned by Olu Badiru. That's for you,
So,
Lily.
yeah. So there's no preference. It depends whether that one jurisdiction, that one country recognize trust or recognize foundation. There's a number of countries that do not recognize either or. So you will have to select, but typically one, whichever, and then the other part is where the family is based and how much you're ready to spend on the structure. That also is a consideration. It's an important consideration, basically.
Okay. Yeah. Thanks. Sorry, Anissa, I had not seen this. Another question is a question from Badiru. Sorry, from Jay. Can a Muslim resident in the UAE create a will, such as a DIFC will, that includes guardianship provisions for minor children?
As a far as I know, I will take this one. The DFC will is only for non-Muslim. So I would say the answer is no. Yeah.
Except for guardianship.
Yeah.
A Muslim person can set up a guardianship will, but there is one additional clause that guardianship will can contradict Sharia law. So it's just a way of formalizing what the Sharia law would say about guardianship. And also as an alternative, we can do an Abu Dhabi court will for guardianship as well.
But just to be clear, the DFC will only be for guardianship in this case. It will not cover any asset if a person is a Muslim.
Yeah. Absolutely, yes. It will not cover any asset but the guardianship, yes. And it will differentiate between custody and guardianship, taking the Sharia law as a framework for that. Harry, we can go to the other question.
Okay, yeah. We have a question from Moses. Moses says, given the challenges of operating in volatile economic environments such as Zimbabwe, particularly with policy inconsistencies, inflationary pressures, and currency instability, what wealth preservation strategies would you recommend? And do you offer specific portfolio ring fencing structures or asset protection mechanisms designed for such high-risk jurisdictions?
That's a very good question. Divine, are you taking it?
Yeah, I'm taking it. That's a great question. The answer is very popular, and that's a word that people don't like, but it's offshoring. It's not having the asset or having that wealth outside of Zimbabwe. There's no way you're keeping the asset there under the jurisdiction with everything that you mentioned. So a number of families, and this is where a number of financial centers provide this. So by having the structure outside, you're not under the jurisdiction of Zimbabwe, and you also need to diversify. You talk about inflationary pressures, you talk about currency instability. So obviously the asset will not be in that currency. And there are there's a number of investment portfolio that hedge the risk against the country. Yeah. But moving out, you're already having that type of asset protection.
Yeah. Yes, and without moving out all the assets, because it's not always possible, the businesses are in the country, they are being operated in the country. Without moving all the assets, we can already start with the first distribution and treasury center out of an offshore jurisdiction such as UAE or Mauritius, which would enable us to receive payments into that entity and pay from that entity in dollar, euro, or any international currency. That already a lot of the families we work with overpass the issues, the local issues, and at the same time keep the operations or most of the operations on the ground.
Yeah, and just to add to that, Anissa, that entity might be held by a trust or a foundation, which then allow the family to start building wealth outside of the country.
Next one, Harry.
All right, thank you. A question from Jay says there appears to be some uncertainty around whether Muslims wills registered through the ADJD are enforceable, especially when they include guardianship clauses for minor children. Could you clarify how ADJD treat Muslims' wills and whether these guardianship provisions are recognized and implemented by the courts?
That's for you, Anissa.
I think that the answer I gave, my understanding is that, and I'm not a specialized on wills, but my understanding is that Muslim can set up a guardianship will, and even actually a will. However, the clauses cannot contradict the Sharia law. So, for example, if we are talking just about guardianship, which is a very important point, let's suppose the father, if he God forbid passes away, the closest male to him is his brother, for example. If in the guardianship will he says, I leave the guardianship to my second or third brother or my cousin or whatever, and if he doesn't nominate that first brother that the Sharia law nominates, then it might not be enforced by the court. So what it does, it clarifies the situation, but it cannot contradict the Sharia law. So that's the current understanding I have from the guardianship will.
Okay. Yep. A question from Solomon. Please explain technically the difference between a trust and a foundation, and how can we use the many benefits the foundation has for the business owner?
I think I've explained that before, but let me do that in 30 seconds. A trust is a legal arrangement between a third party, the trustee, and the settler. So essentially, I give the asset to the trustee to hold it on my behalf and to benefit my family and myself. A foundation is a corporate vehicle that I set up and transfer the asset into the corporate vehicle. So what the benefit the foundation has is essentially, I don't depend on a third party. The asset doesn't sit on the book or balance sheet of a third party. It sits in the book and balance sheet of the foundation. And I control the foundation along with my family. And because the foundation looks like a company, it has a corporate style of management that I understand as a business owner. I can now allocate conditions to the council. Any one of my children, that they need to be 25 with 5 years of experience in my own business. These are certain conditions that as a business owner, I can put in my foundation. I hope this clarified this point here.
Can you show at the same time the that compares them? And I think we need to really insist on the fact that the trust has an external party that will manage the assets, while the foundation, the council, which manages the foundation, is very much a corporate style, like any entity. And that council can be composed of members of the family plus professionals. So it's leaves the family with the control, but it adds to the family people that are technically knowledgeable and professional in managing the governance for the foundation. It adds that layers to the family, and it helps having a much better control on the governance. So if there is one governance principle every family should adopt, what would it be? Jennifer is asking this question, Levine. If only one principle to start with.
Oh, that's hard. That's really hard. I think I will do like a Greek philosopher, know yourself. So know your values, because whatever system we put in place, if you don't know what are the values of his family, whatever principle else you adopt doesn't make any sense. We're fighting for what? Yeah.
Yes. Levine, from the example of the Zimbabwe Family Business Summit I attended, what I could take from it was really that the family needs to have a vision and needs to test that vision. It cannot be like a top-down approach or just like a ChatGPT built vision. It needs to be like a conversation between all the members of the family. And I like to say it needs to be the Majlis style, the UAE, the Middle East Majlis style, whereby everybody is sitting, discussing, contributing to the conversation on what should be the vision, what should be the values. However, at some point, the patriarch or the matriarch needs to kind of bring everybody to a consensus on this is what we want to build. This is what needs to be our long-term objective as a family. And once we have that, it will help build the different steps of a solid governance for the family.
There's a very interesting question here. What happens when the next generation doesn't want to run business? And this is exactly why we're doing the webinar, because that question should be have answered before the demise or the retirement of a founder. So there should always be a solution in the trust of the foundation that provide for this. And essentially, it's either the foundation appoints somebody else to run the business, or we sell the business if it's not as profitable as it used to be.
Yes.
And this is the. So yeah, that's why we're running on.
Divine, you're absolutely right. I think businesses don't look at solutions outside of the family, and that's an error. If you have the right structure in place, if you have the right governance in place, that business can be run by anyone, and it can be sold to anyone, and it can even be reversed acquired by the second generation, etc. So the engineering around how to pass that business is infinite. It's an infinite possibilities. But if we don't have the right structure and governance, then no one can take it over, not even the family, but not anyone external to the family. But there are a lot of situations where the family remains as a beneficiary of that business and of that wealth. However, that business and that wealth are run by external parties, professional CEOs, professional council members, etc. So there are a lot of solutions, but they are a byproduct of a good structure and a good governance in place.
Okay, so we take the next one. Question by Solomon that says, he says, what is the difference between a foundation, structured trust, and a holding company?
Again, we can show the slide, Levine. We can show the slide comparisons between the different structures. Yes.
Yeah. We don't have a company in there, but essentially, a company is a great vehicle to consolidate asset. So it pool, and you can have some form of governance as a board. It is used typically to ring-fence a trust and foundation. So that's the first use of a holding company in this case. It's used also in jurisdiction where either where you're holding the asset, they do not recognize trust or foundation as direct shareholder. By having a holding vehicle underneath, you facilitate the acquisition of asset. And of course, because the holding company is a business, it can take risk, it can take loan or funding. So should anything happen at the level of holding company, it's the holding company that goes down, not the foundation, not the trust.
Absolutely. What are some examples of conflicts you've seen that could have been prevented with a proper governance?
I think I'll go back to, that's a great question. I'll go back to the question before, just earlier. What happens if a next generation doesn't run the business, doesn't want to run the business? It shouldn't come as a surprise. If the work was done properly, we would have known early on through a governance system that this was going to be the case, and we would have also a plan B or plan C and have alternate. So this is a traditional conflict where part of the family wants to sell, part wants to run the business, and there's no dispute mechanism, and there's anything.
Yeah, and if I may example that I've heard of when I was in Zimbabwe last week, the founding generation does not always like the ways of the second generation and vice versa. And because of the respect that our culture imposes, we can't really talk openly about these differences and these how do you say these complexities that would arise. But if there is a clear governance, then maybe whatever we feel can be put aside, and we could run the business as per what that governance dictates to us, if we agreed on the governance, of course. So one of the examples was, complaining about non-alignment between first founding generation and second generation taking over. Also, sometimes between brothers and sisters, we see a lot of conflicts arising from very different management styles. And one of the things that we talked a lot about last week was we need to understand what every member of the family wants and does not want, what he's capable of and not capable of. So, for example, putting one of the children as a CEO of the group when that person is more of a risk-averse person that wants to be more looking at operations, framing operations, controlling risk, is an error that a lot of families do, and that jeopardizes the strength of the business.
And maybe something that we forget to add is a good wealth structure, governance structure, is not only good for a family, it's good for business also. As an investor, as a partner into your business, I want to know when I'm putting my money, but should something happen to a patriarch, the business continues. I want to know that your business doesn't have a key man issue, where when that sole person disappears, we end up into a legal dispute among heirs. So it makes business sense also to put this structure in place. A lot of banks, when they do their due diligence, a lot of finance invest funds, they look at the whole ownership structure. And this impacts the rate that they give, the interest rate that they charge on the funding. So the cost of and Alisa mentioned that before, the cost of the funding is impacted by your structure also. If there's a high risk that sole person passes away and the business stops, my interest rate as a funder is going to go up. It's natural. But if I can see there's a proper governance, the family has taken the care to have a succession plan in place, then your risk goes down. If your risk goes down, the interest rate goes down. You have more funding.
Okay. Sorry, go on, Anissa.
Sorry, because I'm choosing which question next. There are so many, we can't answer all of them. Could you confirm for me that the foundation is the best vehicle to avoid conflicts after the founder, owner, or patriarch's demises? Is there any other structure that beats foundations?
It's a tricky question, because first is what foundation are you talking about, and then where the founder is based and where the assets are based. But to answer, it's the best that you can have, yes, and it depends also with whom did you set up the structure, how much care and time you've taken to set up the structure. We need to address how the asset has been contributed, whether the founder knew what he was setting up. So there's a number of what you call ways of challenging a foundation, and this has to be tackled before. So can you confirm? Yes, if it's a foundation set up properly, it's the best way to avoid conflict. Correct.
Levine, how are foundations taxed in the UAE?
Okay, I've done a whole webinar on this. So a foundation is a corporate vehicle in UAE, so it has to register for corporate tax. It is subject for corporate tax. But there are two caveats. You have two exemptions that has been provided in UAE: the nature of your income and the nature of your structure. So the foundation can apply for family foundation exemption to be a transparent vehicle. So thereby the taxability moves from the foundation to the beneficiaries. And since in UAE there's no personal tax on passive income, there's no tax impact. The second one is the nature of your income. If it's a dividend from a local business, if it's any form of asset, what you call participation exemption, you might not be taxed. So yes, the foundation will be registered for corporate tax, and yes, there are avenues to waive or to be exempted from the corporate tax.
Thank you, Divine. Divine, a lot of people are asking us whether we will share the slides. I don't think you have an issue with that, right? We can say
No,
yes.
I don't have any. Yeah, yes, that's fine.
Okay. So Harry, we are okay sharing the slides and the links towards that recording for people who have asked, because it's coming back and back and back. Divine, I know I'm supposed to be the expert in bank account opening. However, when it comes to bank account opening for a foundation, I'm willing to rely on your experience. How easy is it to open a bank account for a foundation, and which jurisdictions are opening bank account for foundations?
So how is it is depending on the profile of client, and essentially if it's a high net worth individual willing to deposit a minimum balance in the UAE, but minimum balance starts at 500,000 USD and it can go up, you can pretty much get access to all the UAE banks. But we also open bank accounts in Mauritius, in Monaco, in Singapore. You don't have to automatically have the bank account in the UAE because the foundation is in the UAE.
Okay, and how easy is it in the UAE to open a bank account for a foundation?
It's not that easy. This is a paid service, unfortunately, if it was easy. But if a profile is well, we have all sorts of source of income of that client, source of wealth. That process is quite easy. You're looking at 2 weeks to 1 month at least to set up a bank account.
Okay, so feasible, and we will do it. We will take care of it. Okay, there is a question. I'm not sure we are able to answer it or not, but I will ask the question. And if we are not able, maybe we send the answer by email. In the Nigerian context, how much experience do you have with Nigeria, Divine?
Not much. I have a lot of Nigerian clients, but I won't claim that I'm an expert.
In the Nigerian context, what are the common pitfalls when trying to merge a traditional family will with a modern corporate governance structure? By Daniel Bakare.
Yeah, I don't think you would merge those two. We got two different tools doing two different things. Your traditional family will, I suppose, is to distribute the wealth upon the death of whoever drafted the will for. That's one point. So that's one solution. It doesn't give you governance per se. Governance structure would be your trust or foundation where you establish the framework within that structure. So I will not merge those two. I might take some points where who receive what and when, but that's all I will take here.
Okay. I think we will have to answer it by email. I have family assets that are in Stanbic IBTC pension. How do I take a portion of it and set up a family business?
I think you will have to ask Stanbic IBTC how
exactly, right? We need to know what are the terms. We need to know what are the terms of that vehicle first. So maybe Gabrielle Lamèche, if you can reach out to us by email, we will ask you some discovery questions that you can ask to Stanbic, and then after that we can help you structure something. Now, please, how do families make decisions when some family members work in the business and others are only shareholders?
Oh, that's amazing. That's a great question because it tells you the dynamic. So you have someone that has sweat and someone that has only equity. And you will have to evaluate how good those family members working. So this is where the family constitution and the debate comes in, the discussion. How do you determine salary first? Because a family member that works in your business is not only an employee, he's also a family member. So he or she is incentivized for certain decision being taken. A shareholder has different priorities. A shareholder only wants the dividend at the end of the day. That's all. So these two are conflictual. So how do you make decision? You need to evaluate now. at the level, what's the power of each, and there should be a mechanism. So a conflict resolution mechanism.
Again, we can help with that.
Correct.
If you
Yes.
reach out
Yes.
to us. We are actually already in terms of our webinar. We've already finished 1 hour. I would like to just give the opportunity to our director, our regional director, Ibukun, who's present with us on the webinar. Ibukun, are you here? You hear us? I think she's talking, but I don't hear her. So Ibukun, I wanted to introduce you to our attendees as our regional director. Unfortunately, we're not hearing your voice. So I'm going to just talk on your behalf. Recently, we've set up our offices in Lagos, and Ibukun Ajidahun is our regional director. So please, if you have any specific questions, if you want to follow up on this presentation, do reach out to Ibukun. As Dawiya Family Office, we cover structures, legal structures, and legacy, but we do much more than that. And you can see here the list of services that we offer to the African families and African family businesses that reach out to us for internationalization, expansion, consolidation, and transmissions. And we do cover the business, but we also do cover the family needs as well. And Ibukun can share with you our corporate brochure, can take you through the details of what we offer from Lagos and from the UAE. And hopefully we will see you at our next webinar in April, which is around business expansion and entrepreneurship. Thank you so much, Levine, for being our expert on today around governance and family decision making. Thank you, Harry. Thank you, Warda. Thank you, Bridget, for putting together this webinar. And inshallah, see you very soon.
Thank you. Bye.
Thank you.